All right, guys, welcome back to Revealing Real Estate. I'm your host, Nico Pedizano, and today we are going to have a wonderful episode. We're going to have Tom Villano from Owl Mortgages to join us, and we are going to dig into the rental market. A lot of our stats are always discussing sales and how many units are available, months of inventory, what's happening within the Toronto real estate market, pricing of houses going down. But a lot of things we don't talk about is the rental market, and it's been a common asked question that we've been receiving from a lot of people, and specifically a lot of our viewers who are sending some DMs and want some understanding of what's happening within the rental market. So we're going to get Tom to join us live today. If you can, Peter, hit the request. Tom is going to be joining us live today to get him onto the show. And we are going to talk about the rental market. We are going to be talking about interest rates. We are going to be talking about iPro Realty, the shutdown of 17 locations, 2,700 realtors now looking for a new location to call home. So, Tom, welcome to the show. No problem, no problem. It's been some time since you've been on, but just wanted to discuss pretty much what's happening within the real estate market, what's happening with trends into the rental market, interest rates. We're gonna break it all down for all our viewers. So let's just kind of dive right into it. You ready, Tom? All right. So, Tom, just rental prices right now. It shows we're showing for Q2 of 2025. We're seeing average condominium rental price points for apartments actually starting to come down. And I want to get some insight from you and why you think this is happening. So let me break this down. Average rent right now for a bachelor apartment is hovering around $1,875, which is down from last year about 4.6% on the rental rate. One bedrooms are down 5.1%, which are hovering around 23.26 per month, which is the average price point for a one bedroom. Two bedroom condominiums right now are averaging 3,066, which are down by 3.5%, and three bedrooms are actually down by 2% right now, which an average three bedroom will rent out for about $3,613. And this is throughout the GTA. We're seeing inventory quite high on it. So, Tom, why do you think on the condo apartment buildings that, in your specific opinion, why you've seen the rental rates actually starting to drop right now?
Yeah, and Nick, just from transactions that we see, the last 2 years, there've been a number of new projects that have actually been delivered to market. They've gone through the construction process, and now they finally hit the market, and they're starting to take final occupancy. There were a lot of investors. You've seen in the last 5 to 6 years, a lot of investors buying bachelor apartments for investment in order to rent. So now that we're seeing all those come into the market, we're seeing a lot of competition. And when you have competition, it drives the prices down. And there's a lot of inventory on the market right now. There's also a lack of renters out there. Immigration is down. Government of Canada sort of put a stop on immigration. So people that entering into the country, their first point of contact, if they don't have family here, they're usually renting. And and when we don't have immigration, we can't fill those empty units, whether they're in Toronto, across the GTA, or even north of the city. That's Bond, for example, as well as across Canada right now.
There's a lot of what I'm noticing too is that we're seeing a lot of these assignment or investor products that are closed from these pre-constructions all hit the market right now and looking for tenants to come in there. So there's been a surplus of supply. There's still demand out there within the market. Rent is still taking place. Just that because renters have so much of a selection to choose from, we're seeing that these rental rates really drop. From a 2-bedroom condo, there's a savings about an extra $200 a month right now for somebody who's looking within the rental rates. So we're not just seeing a decline in values on sales, we're also seeing a decline in rental units, specifically in the apartment sector for condominium freehold. And these are specific numbers throughout the GTA. If I break down townhouses, which are freehold townhouses, and then some are condominium, but a 1-bedroom like townhouse right now is averaging about $2,100 a month, which is down 6.1%. Now these are stack towns, so you'll find 1-bedroom stack towns still, but they're down 6.1% right now year over year. 2-bedroom townhouse right now is averaging around $2,693 a month. So let's just call it $2,700 a month. That's down almost 4%. And 3-bedroom townhouses right now are down 3.3%, which are hovering around $3,200 a month. We were getting about $3,500 a month on rentals for 3-bedroom townhouses freehold. And 4 bedrooms right now are down 1.4%. So the average price point for a 4-bedroom townhouse is still getting about $3,800 a month right now, again, across the board throughout the GTA. So we're seeing rental declines across all unit types, not just in the apartment side of things.
Yeah, I think Vince. Sorry, Nick. A lot of those units there, like the smaller stack towns or townhouse units. Again, there was the majority of them were sold to investors, and at the price point when let's say the developer went to market was reasonable for an investment. Now the larger units, my thought is people are selling out of bigger homes and maybe parking some equity temporarily and going to rent. They're moving out with a family, maybe 1 or 2 kids, and they need the 3 or 4 bedroom unit. So they'll rent temporarily in a townhouse or a stack townhouse until maybe the market rebounds, or there maybe even some people that want more certainty in their employment. We're seeing employee numbers increase over the last little while. I read a report recently where they think it's gonna sort of top out at the end of this year and get better into 2026. But we're hitting the peak right now of unemployment, and again, that's another reason people, not just the renting, people aren't buying, right? Because of job security. They're not sure if they're going to have a job 3 months down the road, and making the biggest investment of your life, purchasing a home. People are putting it on the back burners right now, right? And just wanting to, keep their family a roof over their heads and keep them fed and keep them warm come wintertime in the next couple of months, right?
Yeah, and we're seeing the test of times right now. In regards to that, we're unemployment numbers right now. Just hitting very close to 9%. I think that number is a little bit low in my opinion. That's not including sub trades in the construction sector, which I think
and that number doesn't take into. I mean, it doesn't take into account self-employed individuals, right? Where those numbers don't report up to the government, right? In terms of unemployment numbers, and we see, the work has slowed down. You don't see as many projects underway. Some developers, you can see they're starting to service land in the hopes of going to market in the next couple of years, but no new projects are hitting the market. Before we get inundated with emails saying, new project launching this weekend or 2 or 3 projects launching in the coming weeks. Now they're fewer and far between, right?
Yeah, and I think you're going to see a lot of the servicing still continue, like TAC or Conjuring, going out and servicing their projects because they want to keep their people busy. Majority of them don't want to start continuing. Now, layoffs are coming across the board from all sectors in the construction industry. And we're talking drywall companies, electrical companies, plumbing companies, window companies. This is across the board. There's major layoffs that are starting to take place. I'm having these conversations with them, and they're sad conversations for sure. So what happens is a lot of times, just to get there are people employed still and working within the company. They have enough money that they can start these projects and just let them sit and not and wait to open up a sales office. But we're seeing a lot of a hardship that's taking place, and with immigration slowing down, Tom, could we see the rental market continue to start declining? Because I think it's like you said. I think by the time we get to the end of the year, we may take a lot of that demand out from the market just because we're having less immigration coming in, and majority of the immigrants that come into within the country rent first. But on the turning point, and I want to put this out there before you answer that question. Could we see also an uptick in transactions for lease properties, because we are seeing more foreclosures than ever before, where people are losing their homes, are not being able to get renewals done, and the only obvious solution to that would be to get into a rental dwelling.
Yeah, and again, I think that's gonna help push the numbers up, definitely in at least in Southern Ontario as we see it now, right? People will want to sort of unburden themselves from that monthly mortgage payment, and move into something where it's going to be, maybe it's a 1-year lease or it's month to month, where they're not tied to having to pay property taxes and any type of repair to their home. A lot of people are dipping into savings right now. They're just they're depleting their savings. Anything they've sort of built up over the last couple of years, they're having to rely on that. We post a lot of mortgage applications. We see credit facilities. They're all at their maximum, right? We see, individuals leaning on family member, maybe a parent that has a property that has some equity in it. We're seeing an uptick in reverse mortgages where, parents are helping their kids. They're taking equity out of their homes. They're on a fixed income, so they may not have the means to qualify for a mortgage. So they're taking a reverse mortgage where they don't need any income to qualify. And they're giving their kids their inheritances early, just so that they can keep up, their mortgage payments, keep their kids in their current homes with their families in order not to disrupt them, not to take the kids out of school or not having to, move out of a certain area for it to become more affordable to them. So we're seeing a lot more uptick in definitely that reverse mortgage market right now.
Yeah, that's a really good point that you're making there, and we're not seeing any relief right now as well, specifically coming from our government and the Bank of Canada. They've stayed steady for the past 3 announcements, Tom. You're dealing with it. You're right at the forefront. So you're at the kitchen table with the people. You're dealing with the banks right now and the financial institutions. What's the consensus out there within the market in regards to rates? Is there any further reductions that are going to be coming into the interest rate come September, October, November? What are you hearing out there?
Yeah, I mean, it's I want to be positive. I don't think we'll get another rate cut. If we do before the end of the year, it might be another quarter point. We're starting to see a lot of the banks drop their fixed rates, right? I think the push now with a lot of the institutions is to try to get people into something a little more secure, like a fixed rate mortgage. This past week we saw a big one of the major FIs, financial institutions, drop their 3-year rate to below 4%. We haven't seen, and this is on both conventional and high ratio mortgages, which we haven't seen in the past 3 or 4 months. We're also seeing the banks become very competitive in terms of renewals. This year is probably one of the largest renewal years on record. Anyone that bought during COVID when rates were really low, they have a renewal coming up this year. The banks have already invested a lot of time and effort into holding on to that mortgage for the past 5 years or 3 years, whatever it is, and they're becoming very competitive. A lot of times we're losing out on existing banks offering rates that we can't even match in the market right now. They're so much lower, and the banks want to keep these people on their books and not having to, lose that business. If it's a client that pays on a regular basis, they've had no issues with them. They're being very competitive in terms of renewal rates, and that's what we're seeing right now.
Is it hard to get mortgages approved right now, Tom? Are you seeing that there's a lot of rejection coming in from banks where you're moving them over to B lending and sometimes private? Are you seeing a big push there?
Yeah, I mean, we're seeing again another uptick in that in the B space right now. Dealing with self-employed individuals. They're the key there is you're either paying tax to the government through your income, or maybe you pay you keep it in your business and you pay a slightly higher interest rate and go onto the B side. We do see a lot of private mortgages, a lot of people relying on private mortgages. One of the things, and when they're entering a private mortgage, they're going into, a situation where they're not even making interest payments on that private mortgage. Our suggestion when we see clients like that is, get into something that at least you're making payments on, that shows that the banks, like, let's say we're having to refinance them a year or 2 years down the road, that you're making payments even on that private mortgage, that you have the capacity to make those payments and not, cap your interest to the mortgage and don't make the mortgage payments on that private mortgage. So we're also giving a lot of advice, right? We see a lot of renewals come in, or people just calling us, asking us, can you take a look at my renewal? Do you think you can do better for us? We're going back with suggestions. If the payments are increasing, maybe talk to your bank and talk about re-amortizing your mortgage up to 25 years or 30 years, just to lower your interest rate, your mortgage payments, to help you get through these lean times right now.
Yeah, that makes a lot of sense, because there are a lot of people right now that are budgeting, having difficulty times just finding, making ends meet. They're average Canadian right now. Statistics are showing that they're becoming more and more in debt, and that's credit card debt, line of credits. Sooner or later, things have a tendency to break, and I believe, in my opinion, things are going to get worse before they get better. I still believe that there's going to be a lot of turmoil within the market. I do believe that there's going to be more inventory that's going to be coming out within the market, and when more inventory starts to come, and the Bank of Canada, just want to bring up this point, didn't reduce rates last time because reports are showing that they're saying that there's economic still stability within this real estate sector. And what they mean by that is, if you look at the sales transactions that are taking place month over month, we're averaging anywhere between 5,000 to 6,000 sales a month still, which is still a healthy market. If you look at the trends in the past 3 or 4 years, and I talked about this last show, we're still in a healthy market where things are still transacting. We're not in a full blown buyer's market where people are not buying. Buyers are out there, but buyers right now have so much choice to choose from that they are just putting in offers in on properties, and they're catching a lot of people that are really desperate to move out of that product. And that's what's bringing the average price point down on these houses, because the amount of inventory that's out there. And I think that inventory will still continue to decline as unemployment still starts to rise. And eventually we'll find less and less demand that's going to be coming out within the market itself. That's why I do think, even on the residential sector, we're going to see this get a little worse before it gets better. That's just my opinion on it. I hope I'm wrong. And I just don't know how long it's going to take for us to get out of this. Condominium markets, Tom, me and you've talked about internally within the office, and we had our team meetings. I don't see the condo market coming back for 4 to 5 years. So without construction, which is a huge factor, and pretty much the main resource of what really makes our economy float within the Toronto market is real estate. And without new construction starts, unemployment will start hitting the roof. And that's my biggest worry. That's the biggest thing that we need to keep our eyes open on. And I always said this before, our markets are all based on whether interest rates are high or low, because people don't buy value, people buy mortgage payments. If we can get those rates lower and the government can start providing relief within the for people right now that are losing jobs, and just create that type of breathing space because they're going to bring down rates. That would create a little bit more certainty within the market itself. I think people would not be so fearful, and I think people will start transacting more. Um, and I think that's what's really going to be the big driving force here to really kind of turn over things. But as you said, if you don't see any rate drops coming all year long, and maybe possibly in spring of 2026, that's a long time here right now, and I think there's going to still be opportunities out there for buyers.
My belief, Nick, our current interest rate on the Bank of Canada overnight rate at 2.75. It's actually, if you look back at history, it's actually not that high of a rate. We've been accustomed to low interest rates during the times of COVID 5 years ago, where interest rates were near zero. At 2.75, it's actually a healthy rate for the Canadian
It is,
economy,
but most A-lender banks, Tom, Bank of Canada's posted rate is 2.75, but your fixed rate is still going to be jumping about almost 2% above that posted Bank of Canada posted rate. So you're still in the fours on a fixed, no?
Well, that Bank of Canada rate is what the banks transact at, right, with the government. So there's always going to be a small premium above that. Usually it's 2% above that, or 1.75% above that, so that the banks have some type of revenue stream, right? But again, at 2.75, it's not as bad as we make it out to be out there. Do we want low interest rates? For our line of work, we want the lowest interest rates possible, right? Because we believe that's going to stimulate purchases. Unfortunately, we've had seven interest rate cuts since we hit the peak, and it still hasn't stimulated the real estate market as robustly as we've wanted it to, right? So it's not the interest rate that's holding people back from buying. Again, it goes back to that job stability. It goes back to immigration. Not having people come in through our borders in order to purchase properties, or in order to rent temporarily and then get into a property, right? So there's other factors other than just the interest rate.
True, but right? Tom, I just want to throw this out there. Let's say you got a fixed rate now. What's the average fixed rate? 4.25 today on a 5-year fixed?
Yeah, 4.25. That's 4.30.
So the Canadian posted rate right now, the Bank of Canada posted rate now is 2.75. So the delta between what the Bank of Canada is posting and what the banks are offering is about what, 2%?
2%. Yep.
2%. So the banks right now could choose to lower that and say, okay, well, if our delta is going to be 2%, could we make only 1%, right? And then and charge a rate now of 3.5%, 3.75%, which will help as well, stimulate things and get people out there to get some relief, so we're not seeing foreclosures.
Yeah, I mean they do discount the premium. For example, let's say a bank's posted variable rate is 4.95, which is usually the number across the board for most institutions. They usually discount 40-50 basis points. So you're seeing that variable rate at 4.5%. There's some that are really aggressive. They'll even offer a 1% discount, right? So you're not at 270. Sorry, you're not at 4.95. You could be at 3.95 or even 3.80 in some cases, right?
Right.
So they are being proactive in the sense of discounting that variable rate. I think the next push is going to be more towards the fixed rate. Banks are going to be a little more aggressive in terms of discounting that fixed rate mortgage. And again, it'll give, consumers more stability, more reassurance that, that their rate is not going to increase or their payments aren't going to increase when the rates increase or decrease, right? We've had this discussion in the past, I've been in the industry long enough to see when, we had contract rate. I liked when we used contract rate instead of the qualifying rate, right? So, you negotiate a rate of, let's say, 3.99 on a 5-year. We're using that number to qualify people. Today, we're using 3.99 plus 2% to qualify them, right?
Right.
But if you know you have someone that's going to be locked in for 5 years at 399, maybe extend that that lending a little bit, right? Give them a bigger number to purchase, or that affordability, right?
Yeah. Yeah, that makes all the sense in the world. So another test of the times right now, Tom, is me and you've talked about, we know certain builders that have actually just claimed bankruptcy and going out of business, and we're seeing a lot of these small builders right now not able to maintain it. I'm hearing that a lot of these condo projects right now, talking to high level clients, are getting offered the opportunity to buy floors on these condos at a real discounted price, and I'm hearing these prices are falling in between $500 and $550 a foot. You got to remember, back in the day, these condo prices were hitting $1,100 to $1,200 a foot. So there's some real discount prices that are being offered so that these developers in the condo sector can actually continue to build these projects and get these projects built and off to the races. And now we're also seeing a real estate brokerage just right now got reported that got shut down by RICO, which was iPro Realty, and they were ordered by RICO to shut down on August 19th of 2025. After inspections, they revealed serious issues. There was an initial shortfall of more than $10 million that was identified in its consumer deposits and commission trust accounts, which later got revised to just under $8 million. So there is an insurance protection for deposits and commissions, which is capped at $4 million total for all claims, leaving a significant gap between, the losses and the coverage. So what they were doing, iPro Realty, is they were dipping into commission trust money, which is totally illegal from the Real Estate Council of Ontario, and they were using that to keep their business afloat because of the times right now. And iPro Realty was always known as more of a discounted brokerage, where they would just charge you a small transaction fee. But if realtors are not transacting, there's no fees to absorb. So to carry business, they were dipping into the commission trust money, and there was reported now up to $8 million. Now, this brokerage also employed approximately 2,400 agents across 17 locations in Ontario, which included Mississauga, Toronto, Orangeville, Milton, Brampton, Scarborough. Now, RICO has also stated this represents a serious breach of responsibilities under the Trust in the Real Estate Service Act. So it's a big issue that they are facing right now, and they shut down the office completely. And now there's a lot of realtors out there that are scrambling to find new brokerages, and you got to remember there was deals that were in process there through the transactions that were taking place. So what happens with those deposit monies, which now are going to get claimed through an insurance? So it's a big mess. But we haven't heard about a brokerage, doing this in quite some time. It's taking place within the past, but these are going to show you the difficulties that even real estate agents are facing, and specifically young realtors within the market. That are just there, park their license, and trying to find new employment. And again, we are self-employed. We are part of those statistics that are not reported in the unemployment numbers. And there's a lot of realtors that are leaving the business just because things are so difficult to transact in. And I think the consumer today is more moving towards the bigger branded agent who has very good, strong marketing campaigns that will be able to get their property exposed and give it the exposure it deserves by still investing into that house, getting it, really good exposure to the house to create the traffic on there. And now they're not going to use these part-time realtors that once are full-time job accountants but have their license part-time, because it becomes a lot more difficult to sell within this market. And if you don't do your background research on how to price these houses correctly, because pricing these homes correctly is everything, and you'll know within the first 30 days if you are correctly priced, you're going to see a significant decrease in the amount of realtors that are currently out there within the market. So all sectors within these markets right now are really struggling.
Yeah, and to your point, Nick, we have this discussion with our pre-approvals, our pre-approval clients all the time, right? We ask them, are you working with a realtor? How do you know the realtor? What type of history? If they have their own realtor, we ask them, what type of history do they have? Do they specialize in a certain area? If you go down the street, do you see them listed? Do you see listings from this real estate agent, right? We always recommend them, don't deal with a part-time agent because you're gonna get part-time service. Go with someone that's reputable, that has a presence in in the area that you're looking to purchase or looking to sell your property. Talk to other people go into the the real estate, the broker's office, and talk to someone at the office. How's that individual to work with? What's their reputation in the market? And you've had my colleague on here a number of times where he says the first thing you do is you have a family member representing you, fire that family member and go work with someone that that has a reputation or has that can really fight for you and not really give you the sort of the pat on the back family advice all the time, right? Because that's where you're gonna get the best service and your best bang for your dollar, right? Yeah, and I think it's unfortunate that this is happening in the economy right now, given that people are struggling to, again, make ends meet, right? And now they're having to go find a new brokerage to work with. A lot of these people have probably negotiated, certain agreements with the broker of record, and now they're having to sort of go out there and renegotiate with a new brokerage, right? They're going through the interview process. Should they join a Remax? Should they join XYZ brokerage, right? There's a lot of uncertainty right now. That's for sure.
Yeah.
And it's also unfortunate for all these people that transacted with the brokerage, right? I'm sure Rico's getting inundated with phone calls saying, what's happening with my transaction? Am I going to be able to close? What happened to my deposit money? I feel bad for people in the industry right now, right? Because it also questions every realtor in general, right? How secure is your brokerage? Can the same thing happen to a Remax or to another brokerage, right?
Yeah, it's unfortunate. My advice to young realtors right now that are listening in, model yourself right now with a team that you can get some mentorship and some guidance right now. I think within this market too, if you have the inexperience and most people are going to want to deal with people that actually own their own real estate. They're involved within the business every single day, and you're going to need some guidance. You're going to need some help, especially within these markets right now. So if you're watching the show, reach out. We'd love to hear from you. We'd like to sit down with you, see what we can offer you from a team's perspective, see if you're the right fit for us too, and see kind of where that leads. Because it's probably more difficult than ever. But preparing yourself for the next cycle that will come makes you pre-advanced prepared for what's going to take place within the market itself. But Tom, as always, it was a pleasure to have you on the show. We're going to try to work on continuing the show weekly with you and get this get this market knowledge to viewers and consumers, so that they are well prepared on what to do just in case they're struggling or they're in a situation that they need some advice. So DM me, DM Tom. We'll put our links below after the show. We'd love to hear from you, and it's just free advice that if we can help you out, we're definitely here to help you guys out.
Thank you. Thanks for having me, Nick.
No problem. All right, guys. Thanks for viewing in, and we'll see you next week. Take care.
Looking to buy or sell? Call a team you can trust. Don't believe me? Our Google reviews say it all. Put us on your lawn, your house will be gone. TheOPteam.com.